European banks are better prepared than those elsewhere in the world for crises, such as the failure of two regional banks in the United States earlier this month. However, analysts say they remain vulnerable to changes in consumer confidence and weaknesses in the financial sector.
The deep root of these financial events is related to confidence. I mean, you can have very strong fundamentals, but the Nobel Prize on bank runs. Their point is that there is multiplicity of equilibria. You can have sound institutions that operate without problems, and you can have sound institutions that, since expectations and confidence for any reason is low, that's really the true reason of why we have instability and why it's so difficult to predict financial crisis.
Earlier in March, Swiss banker UBS took over troubled rival Credit Suisse after that bank became the first European institution to be hit hard by the banking crisis. The latest crisis in the US began after the failure of Silicon Valley Bank and Signature Bank.
It's not a crisis. I think that it's like a grouping of different idiosyncratic events, okay? Because the Silicon Valley Bank case is completely different compared to Credit Suisse. Okay? And the only element in common is that, again, the turning in the interest rate cycle makes for more fragility. And therefore, all the kind of difficult cases and the most vulnerable places tends to suffer.
German banking giant Deutsche Bank is the latest European institution to come under pressure. The bank's share lost nearly a quarter of its value in March as investors were worried about its vulnerability to outside shocks.